What is going on, guys? Welcome back to another video. Haven't done one of these in a while, and I feel like now's the time that I probably should start doing more of these. For one reason is everybody knows I'm a dividend investor and I like to sell premium. If you don't know what premium is, well, check out the other videos on my YouTube channel. You'll find out fast on how I make cash flow on a lot of different companies and buy them for cheaper than what they are trading at currently. So, with that being said, let's jump into O Realty and what's going on with this company. I've been getting dirty money. So, I want to just go over a couple of things. First of all, year to date, or 1 year, it's down 20%, which is awful. Year to date, it's at 10.82%, negative, also awful. But of course, I want to go back to basic. If we go to max, of course they've made money. But, let's be clear. Look at the headlines down here, guys. Yes, they're still getting their dividend. Realty Income files to sell to 120 million of its shares. I don't like that. I don't like that they are selling shares. Normally, go look at what Warren Buffett's doing in Berkshire. He is buying back shares. Why? Because he thinks it's undervalued, or usually that's the case. When companies start buying back their shares, they think it's undervalued. They're buying it back at a cheaper discount, and the actual NAV, or natural asset value, is actually more. So worst case scenario, if everything goes to zero, they're still able to sell off pieces and get all their money back. And they got to look at it that way. But net cash flow, they're looking at these things. Well, Realty Income is selling their shares. Nobody likes that. That's not a good thing for the company, guys. So we're going to go back here. And again, we can look at 1 year, 1 day. I like to just look at this. This is just on Robinhood. Again, you guys know I like to use multiple different platforms. You guys can see their earnings. This is why I wanted to pull this up on TradingView. Look at their earnings, guys. It's not good. Yes, they pay a monthly dividend, but what raises the red flag to me on these, honestly, is when it comes back to this is, why are they selling 120 million of its shares? To acquire more? Well, you got to remember what business they are in. They are in the business of owning Walmarts, Home Depots, which are absolutely fantastic assets to hold if you own them. Now, you got to remember interest rates and stuff, but look at other ones like Family Dollars, Dollar Trees, things like that they own as well. And if you actually go to Google, and we're just going to type in O Realty Income, and their site normally pops up. Here it is. Oh wow, that's not good. Our portfolio, this should pop up. And this is just going to show you everywhere where they're at. They're in Europe now a little bit, but mainly in America, and they have some in Alaska. But CVS's, guys, I hate to tell you this, but CVS's are not doing the best. Go look at CVS stock. Matter of fact, we'll show you CVS stock. I mean, last time I looked at it, it wasn't doing great. Yeah, look at that. We're down. Everything's down right now. I get that. I get that 100%. But look at the company. It's not at its highs. I think CVS actually closed some stores at one point in time. Don't quote me on that. But I'm looking at open cash flow, and I know that they're a REIT, so they have to pay 90% of their income in dividends, which I agree they absolutely should. But again, you have to go to it and see, how much am I getting? Now, is this a good buy maybe to come back to? I'm not going to say no right now. I'm not personally buying, just so you guys know. I'm not a financial advisor, nor will I ever probably be one. Never say never, who knows. But as you guys can see, obviously COVID happened, and then it's recovered, and now we're just on the trajectory down. Guys, this is not good. This is not good at all. I would rather go put my money in something that I've told a lot of people about over the years, is PTY. This is going to pay you a better dividend every month on your cash, and it's going to stay consistent. Yeah, it's went up, it's went down. Overall, though, stays above around that like a $10 range and goes to $20. You just have to figure out where your good buys are. I mean, PTY is not a bad buy at $14 in my opinion. I wouldn't be buying it at 20, but I don't think it's a bad buy at all at $13 and $14. And I bought chunks and chunks of it when I remember down here in COVID. Now, I didn't buy the absolute bottom, but I was buying in the 10s, and I was so happy to buy in the 10s. And then I remember buying it down here in the 12s. Guys, you have to be looking at these dividends in a more concerning way. Who cares if they pay a monthly dividend? Yes, it's a big thing. I'm with you. I want my monthly cash flow. But you also have to remember what you're investing into. If the $56.23 goes to zero tomorrow, who cares? You're going to get 23 cents for nothing every month. Or what is it? Yeah, 25 cents every month per share. Guys, I'm not with it. The dividend yield 5.39%. I think it might technically be higher now because the share price has dropped. This is not a buy for me currently right now. I'm not giving it a buy rating in my portfolio. I'm giving it a, if I had it, I'd probably hold it. If anything, I don't think this is a buy the dip moment. We had Jackson Hole this week. Jerome Powell will be talking, the Fed. This week is kind of up in swings, but even overall over the next few months, I think I would need a lot more market certainty, especially in the real estate and commercial real estate side, in order for me to want to buy this. Guys, it's not the best acquisition. This 7-Elevens, I mean, yeah, those are gas stations, but again, you have to know what you are buying when you buy these stocks. And to me, I'm not sold on these. I mean, again, you can do whatever you want to do. I've got no problem with anybody ever, if as long as you do your research, doing it. But convenience stores, here's their breakdown right here. General merchandise at 3.7%, automotive service at 4%, which I do think the automotive is still going to be good. I understand the service side and how dealerships work. I've worked in them in the past when I was in college and stuff. I do think that this is a good business to be owning, actually, and owning the building as long as they're paying rent. Health and fitness, I don't like the health and fitness as much. If you own gyms have a very large failure rate, so I'm not. Casual restaurants keep closing. I'm in Houston, guys. Markets are hot in Houston, and I still see buildings with a lot of open spaces and restaurants closing and things like that still. Quick service restaurants, maybe like a McDonald's and stuff, that's not bad. Drugstores, which are like CVS and things like that, I'm not really a fan of. But home improvements, those are your Lowe's, your Home Depots, things like that. If that's only what it's in, I like that one. Dollar stores, I'm not particularly huge on the dollar stores. Grocery stores you can do depending, again, it depends on what businesses they're buying it. But here, Lifetime Fitness, I'm not a huge fan. BJ Wholesale, I've never been to a BJ Wholesale, so the FedEx I'm for. I don't know what B&Q is. 7-Elevens, Walgreens, I'm not a huge factor of. I know they used to own 1.5% in Walmarts. I do like that one. I don't like LA Fitness. Again, you just have to know I really don't like the AMC Theaters one, to be 100% honest with you, or Regal Cinemas. Red Lobsters aren't bad. Again, you have to know what you're investing into and feel comfortable. Realty to me is, I'm not going for it. I'm just not buying it right now. I would rather go buy PTY at $13 a share, and get the drip every month and be fine with it, which is dividend reinvestment plan, and be happy with that. That is my overall opinion, guys. Thank you guys for watching, and I will see you in the next one.